And 72% of the time the market goes up. And the answer came to me. And that's when I developed my chart. The answer came to me is because, just like Caterpillar, when they pull their money out, you get out. Whoa.
It's your daily dose of how to manage your money. And now it's time for Phil's Gang on the Off the Wall Street Network.
Oh, God. I get nuts.
With your host, Phil Grande.
Bye. Thank you for joining my podcast today. Hi, I'm Phil Grande, philsgang.com. So, today I got flooded with emails. Everybody's asking, what happened? What happened? What's going on with the with all the tech stocks and the cloud, meaning the cloud stocks? Because the cloud stocks took off today, but you got to be careful because it was a short covering rally, and you can get hurt. I told my members this morning at Coffee Talk, I said, look, you know, right now, that is the only group, the cloud stocks, that has a group of relative strength stocks. The rest of the stocks have no relative strength. And you got to be very careful with these stocks because now they've been going down for about 9 days. But I pointed out to them, if you look at the stochastics, which again, the stochastic reacts to the price behavior of the stock. It was weird because for 9 days it went down about 8%, but the stochastic, which identifies the behavior of the candlesticks, in other words, it tells you if money's going in or money's coming out. In fact, it was funny. I had a stock called EAT, and I don't know why I classified it as a cloud stock. But it was doing fantastic. And then I got an email. So it's a diner, publicly traded stock. It's a diner. I looked, and it was right. And that proves my point. It doesn't matter what stocks you're buying. What matters, I mean, it does matter what stocks you're buying. Of course, you want to be in the strongest groups. But the other point is what you have to watch the most is the money, the direction of the money. Stop worrying about the fundamentals. And when they come on TV every day, like CNBC, and they start talking about fundamentals, profit margin, return on equity, return on assets, it's all BS. They take those fundamentals, tie them to a story that they push onto the 65 million traders that lose 85 to 95% of their money every day trading. So again, today, as those stocks were going down for 9 days, the stochastic, which identifies the behavior of the candlesticks, which identifies is money going in or money going out, money was continually going in. And that's the one thing you have to follow. Don't listen to the BS, to the stories. Look at your stochastics. If those stochastics are strong and going up, then your stock is going to be strong and going up. But Wall Street doesn't want you to know that. That's the last thing, because you wouldn't need them. It's just like when you buy a stock at what we call sweet spot. And if you bought a stock in a sweet spot, 95% of you wouldn't be losing money. 85 to 95% lose money every day trading. Retail traders. They don't even know what a sweet spot is. But anyways, today, so what happened was interesting. So if you recall, JP Morgan and Bank of America were on fire. And they were going up and up and up. But the problem with JP Morgan and Bank of America, they're going up for the wrong reason. And they were not yield friendly. In other words, if you're going to buy the banks, you want the yields going up. That helps push the banks up. If you're going into the bank stocks and yields are going down, remember, yields act as a compass. Yields tell the truth, not CNBC, not Fox Business. Yields tell the truth that, hey, Bank of America is going up, and we also have JP Morgan going up, but they're going up for the wrong reasons. And take a look at the yields. The compass is telling you it wants to go down. So what it means is, if you look at the stochastic, as long as the stochastic's strong, money's going in. It doesn't matter if it's going in for the right reason or the wrong reason. Stochastics are telling you, hey, money is going in. Candlesticks are green. Let's keep buying until the money stops. And then the market will turn around and just collapse. So Bank of America, JP Morgan, these bank stocks are about ready to collapse. And I'm not saying today, not 10 minutes from now, but at some point they're going to collapse. So what has been happening is all this money was coming out of the tech stocks, going into the banks. Well, now we started to see in the last, I think it was the last 9 days. I think it was from August 14th to August 26th, that the cloud stocks were going down. You have to make any sense. 9 consecutive days, but the stochastics are going up. So what's been happening is, during those 9 days, yields have been going up. So the jibber jabbers on the financial show has been telling everybody, oh boy, look, yields are going up, and you should short these stocks because they're going to go down. But we've been following cloud. We're in a lot of cloud stocks. And the stochastics told us something different. Told us that the price behavior inside the candlesticks were positive. So we kept seeing the stochastics going up, nice and strong, but yet everybody was shorting the cloud stocks. Didn't make any sense. So here's what happened today. Just like everybody took the big institutions who parked their money in the bank stocks, remember, they took the money out of the tech and parked them into the bank stock. Took it out of tech, parked it in the bank stock. So what they've been doing today, they took the money out of oil, the big institutions. There's 6 big money players, okay? You got BlackRock, and you got Vanguard, and you got State Street, and T. Rowe Price, and Capital Group, and Fidelity. You have to follow them. They control all the money. They control the money that's in your 401k. They control the money that's in your savings account. They control the money in all the pension funds for General Motors and Ford. They control it all. They move the money around. So all of a sudden they start taking money out of the banks and out of oil, and they shoved it into the cloud stocks today. And those people that were shorting the stocks got crushed. I told my members this morning, okay, before the market opened, I said, look, one thing you got to do, I said, these stocks can go right back up, because remember what happened with Bank of America and JP Morgan. So I said, there could be a transition here. These stocks can go right back up, because the stochastics, again, the lines on the bottom of the chart to tell you if money's going in or too strong. And today, exactly, that's what happened, exactly. So all of a sudden, they take the money, the big institutions, the 6 biggest money managers pulled all the money, and they pushed all that money into 401ks, into wealth funds. I said, we're going to take all this money out of the banks. We're going to go right back into the only stocks that have any life to them in tech. And that's what they did. So that's why, if you're wondering why these cloud stocks have been going down for 9 days in a row, that's been losing about 8%, and why people were shorting them, they all got crushed because they're not following the signs, the stochastics. The most important thing for you to watch, because the stochastics, okay, tells you the money flow. That's all you want to know. And like I told you, the stock I thought was a cloud stock. We've been in that since, I think, June. And I didn't know it about 2 days ago. It was a restaurant. But proved my point. Who cares? When you're trading, you follow the money. And you got to follow the institutional money. So today, if you follow the institutional money, you'd have seen them taking money out of the banks and going and putting into the cloud stocks. And now all these people who were shorting, they had to cover their shorts in the stock. Don't buy them now. You're out of your mind because they went up on this big short covering rally. Wait till they pull back. Let them pull back a little bit. And then when they make a new high, then you can get in and buy. So that's what's going on with the cloud stock. Those are the only stocks in tech that are breathing. Tech stocks are in horrible, horrible shape because there's no oxygen. You only have 7 stocks out of 700 that are holding the market up. So everybody is now going to be going into cloud stocks. And if you're a gang member, I'll be showing you class when to enter, so you're nice and safe. Talk about safe. I don't get into politics, but every time I hear about how, the Republicans or the Democrats, they both claim they're for the working class. What a bunch of BS that is. Republicans or the Democrats, they don't care. They don't give a crap about the working class. If they did, they wouldn't have lied to you about no taxes on Social Security. What a lie that is. 50 million people rely on Social Security, 65 years of age and older, and most of those people who rely on Social Security are in poverty? And they came out and said, well, there's no more tax on Social Security. That's a bold-faced lie. There is tax on Social Security. But during the election, they kept pushing, no tax on Social Security, no taxes on tips. Well, there may be no taxes on tips. Nobody ever paid taxes on tips anyways. Do you know anybody that works at a restaurant pay taxes on tips? If that occurring, then they must be in the seminary, or they're going to become a nun. I mean, nobody pays taxes on on tips. So, but this idea that we're really for the working class, and this all goes back to how the market gets screwed up. This economy could be so good, so strong, but they're all paying attention to the wrong thing. Let me explain. Remember, Social Security, okay, are for seniors, right? We all know that. And it's not a supplement. They treat it like a supplement. It's the main income for the majority of seniors who are retired, who can't work. And there still is a tax on Social Security. Nothing in the tax law was eliminated. Nothing changed. The IRS formula since 1983 is still the same. When Trump won the election, it's still the same. Nothing's changed. So, Trump increased the deduction for seniors. That's nice. Okay? But he did not remove the tax. He keeps saying there's no tax. So, it's a $6,000 deduction. That's it. And if you're married, $12,000. Doesn't amount to squat. And it's only for the people that are 65 years older, and what they're not telling people, it expires in 2028. Nobody knows that. It's not a law. It was a gimmick. It was a gimmick. I don't know why he does this kind of stuff. He doesn't need to do that. He's a great president. Why does he have to do this kind of crap? I don't get it. Because this all hurts the stock market. You can't grow. You can't grow. Now, the other thing, I don't understand why they don't do something about withholding tax. Withholding tax is ridiculous. Withholding tax is cruel. First of all, going back to Social Security, there should be no tax on Social Security. And if you're married and the husband dies or the wife dies, that money should go to the spouse. If you're married and you're both getting Social Security and one of the partners dies, that money goes back to the government. Wait a minute. That's not your money. That's the money your partner paid on. That, if anything, that's what the Trump should have done. Is said, look, if you're both on Social Security, husband and wife, and the partner dies, the other partner gets that Social Security because they depend on it. Think of the 50 million people that the husband and wife together are supporting a lifestyle with 2 checks. Then they take 1 check away from you when your partner dies and now you're 70, 80 years old. What do? Go live in a boarding house? Some slop shack in California where all the homeless is? I mean, what do? That's cruel. Why didn't he fix that? That to me would make sense. Spouse dies, you get that money, not the government. So let's get back to, so withholding tax is the cruelest tax of all because it hits the workers before they get their paycheck. Think about that. It cuts spending power. That hurts our economy, economic growth. That hurts jobs. Don't tell how many jobs we're creating. No, you would create more jobs if you got rid of the withholding. Because it's cutting spending power. If you didn't cut spending power, our GDP would grow, more money would be put into machinery and so forth, more people would be hired, but no, I'm not going to do that either. Payroll taxes are just so cruel. Because a lot of people, a lot of small businesses, that is the backbone of this country, not Apple, not Microsoft, not Tesla, the small businesses. They don't hire because of, many times, they say, I'm not going to hire this extra person. Because I got to pay withholding tax. They got to pay their share of withholding tax. One of the biggest problems is withholding tax. That's why we can't grow the economy. And that's why only 7 stocks go up, tech stocks. You don't see your staples going up. You don't see your discretionary stocks going up. So the thing is, payroll taxes are cruel, hurts the economy, hurts the stock market, making hiring more expensive, reduces your take-home pay, for God's sakes. So it reduces your take-home pay, and then when you retire, and you get your Social Security, you're getting taxed. It's a lie you're not getting taxed. And then when one of you die, and the both of you, with your Social Security checks together, you're just about getting by, but now one partner dies, they can't make it. I mean, I don't get any of this. And this all comes back to the stock market. And that's why everybody's buying the same 7 stocks, because of crap like this. I mean, withholding tax, that money comes out of your paycheck before you even see it. What are you, nuts? It's taxes on your labor up front. Not after you earned it and saved, up front. So that means the workers lose tremendous spending power, they lose savings power, and the economy loses growth, corporations loses earnings, and the stock market, 7 stocks. So it's a tax on the worker, not wealth. And that's why it's so damaging. So withholding tax is cruel. It taxes labor. It reduces spending power. It hides the true tax burden. And it hits the poor and the middle class that the Democrats and Republicans keep saying that's who they work for. The poor and the middle class. That's all bull S. They don't care about the poor, the middle class. It's unbelievable. So why payroll taxes, Social Security, Medicare? All bad for the economy. They make hiring, as I said, more expensive. Employers pay their half of Social Security. Their half. So you're an employer, you got to pay your employees Half. No wonder people aren't hiring. That's ridiculous. Why did they kill that? Why did Trump do that? I mean, that raises the cost of every worker. Higher costs, fewer and fewer hires, slow job growth, no more capital investment. Companies are saying, small business saying, no, I'm going to put off getting that new truck. I'm going to have to put off getting that new machine I need. It's terrible. I mean, it's taxing labor, but not wealth? Give me a break. So, going back to the stock market, and this all has to do with the stock market. That's why the market right now depends. That's why you saw today, you had the whole market relied on about 5-6 stocks. And that's why you have to know what you're doing if you're going to trade. 85% of traders lose money. So if you look at today and you look at the cloud stocks, the one thing I told my members, I gave it to them today, I gave them a symbol to watch. That's the first symbol. If you watch that symbol, you're going to know if the cloud stocks are going to go down or the cloud stocks are going to go up in advance. Very, very important. That way you'll never be on the wrong side. So if we take a look at SAP, that's one of our stocks. You see how it rolled over? Been rolling over. All of a sudden today it goes up. But as it was rolling over, if you look at the stochastic's strong. It's telling you don't get out of this thing. Adobe, same thing. Started to roll over. Remember, all these went down about 6 to 8%. But the stochastic was telling you, don't get out. They shouldn't be rolling over. But why were they rolling over? Because the geniuses on CNBC and Fox Business were telling people yields are going to go up, so you better get out of your cloud stocks. Now, they're not going to tell them, well, wait a minute, let's take a look and see if they have relative strength. Let's take a look at the stochastic, which identifies do we have a lot of money still going in these stocks, even though they're rolling over. And the answer would be yes. So you would never get out. And look at the big move you missed today. I told my members today before the market opened, I said, don't change anything. Let's stay with our positions because this thing could go back up. And sure enough, today it took off like a shotgun. And people that got out of these or people who were shorting got just crushed. They got crushed. So these are the only stocks now. And look at Intuit. Intuit had a nice rally all the way up, and then on August 24th, it stopped. And it had a big pullback. But wait a minute. The stochastic is up. Why would you get out? But people were, and people were shorting it. And then look what happened today. Bam, went right back up, just like I told my members. These things can go back right up. But don't buy them until they make a new high. So all these stocks that went up today, don't start jumping in them. Okay, look at CRM. That's one of the biggest stocks. That was the one. That's the one stock was shorted the most. How stupid was that? Shorting those stocks. When you look at the trend, the stochastics that identified money's going in, money was pouring in while these dopes were shorting these stocks. Of course, they're going to get caught, and that's why if you're in there shorting NOW, you got crushed. Now, NOW, you don't jump in and buy that today because it went up. If you didn't buy the stock in the sweet spot, you should always be buying. You should have bought that stock around where we did. It was around July 22nd. It was around, I don't know, it was around $95, somewhere in that area. So, but if you're going to get in today, because it jumped up, I got to get in. It's at 138. I got to get in before it gets 139. You're going to lose because the stock's going to come back down because it's going up for the wrong reason. All it is institutions moving money from oil and banks to cloud. Then they're going to move money from cloud to who knows where. They move it somewhere else. All they do is like a shell game, keep moving around. But they're not bringing in any new money. The 13 trillion that's always in the stock markets, there's only 1.3 trillion that's trading during the day. The other money's sitting on the sidelines. So don't be chasing these cloud stocks. Let them pull back and let them make new highs. And if you've got good volume, we'll show you how to buy them. Okay, we'll show you how to buy them. Well, that's it. So again, I got so aggravated today when I'm listening to them talking about Social Security again, because now we're in the midterms, and they're pushing that. Social Security, no taxes, no taxes. That's a bold-faced lie. There's still taxes. And when they keep saying how, and I hear both of them saying how they're for the working class. No, they're not. The first thing they would do is get withholding tax, get rid of it. It's killing owners, small businesses. Many times they don't hire, like I said earlier, because they don't want to. You know what it costs a small business with a withholding tax? That means they're not going to buy another machine. That means they're not going to hire 2 more people because of withholding tax. Why don't they get rid of that stupid withholding tax? And get rid of Social Security. Let everybody take their own money and invest where they want to put it. Then they're going to say, well, some people don't know how to invest. Well, you can put a pool together if you can find enough people with integrity on Wall Street so they'll manage it for you. But they could be, I mean, people that put money in Social Security, I mean, when they put your money in Social Security, they're stealing from you. Can you imagine you work hard your whole life and they take the Social Security and they're supposed to invest it for you? Are you nuts? Are you crazy? These Wall Street gangsters investing Social Security for you? The government steals it, number one. They take the money from you. There's no box with your name on it with money in it. They put it in a general fund. And then they still lose, $1.2 trillion a day. They're spending more and they take in some crazy number like that. All right, well, anyways, that's my complaint for the day. No more Social Security. That's ridiculous. Okay, let's fix that. Withholding tax, got to get rid of that tomorrow. And let's really have Social Security with no tax and no more withholding tax. You realize how stocks would go up? Unbelievable. All right, that's it. I'll see you on the charts. Thank you for joining my podcast. Please join me again tomorrow. Tell your friends about it. I'll see you on the charts.
Are you nuts?